Hello and welcome to Trading Mum Basics video series. I am Kalyani, the Trading Mum, a hands-on mom, wife, and a serial entrepreneur. I'm an economics postgraduate from London School of Economics, and I intuitively didn't want to go into banking or consulting. I worked in corporate jobs for 5 years before following my true passion to create more impact and started my first business in 2018. I started trading then in 2020 and it felt truly like coming home. My economics background helped with the analysis part, but I soon realized how formal education missed out on some really fundamental information about managing and growing personal finances. I've been on a journey to learn more since, and after multiplying my initial capital, I'm here financially free and confident of earning an income from my stock investments. I wanted to create a community of like-minded people who can grow and support each other, becoming financially free without compromising on their time. Trading Mum is an education-based community sharing simplified investment knowledge and real-time trade alerts. While everyone's welcome, Trading Mum is born from my burning desire to educate women in creating a future that grants them true freedom of time and money. It's for all those women who are busy with their homes, work and children, all of the above, and could do with a little less pressure and a little more cash and confidence. If you appreciate the flexibility of time, location, having no bosses to report to, and a well-rounded, risk-controlled environment, then the Trading Mum community is just right for you. Over the course of this basics video series, I've made sure to give you all the valuable knowledge in roughly 10-minute chunks. You will learn the key essentials of trading and then by the end have the confidence to actively trade yourself. Let's first understand why we consider investing. Why do we want to put our money into investments that earn us more? Basic pretext under this is the decreasing value of money over time. Do you remember your favorite childhood candy costing a few pennies back in the day versus a couple of dollars now when you buy the same for your own children? This is because of inflation. The cost of things rises with time, and so the value of the same dollar of money falls. We want our hard-earned cash to increase in value, not deplete, and so we want to make our money work for us. There are many ways of doing this, the most common being to invest in long-term deposits with your banks. These usually give around 1 to 5% return, sometimes even lower, and are usually much lower than the real rate of inflation we experience in our day-to-day living. But just to let you know, our banks pool all our money together and then invest in the same markets on our behalf. With a good strategy, risk management, and a solid mindset, it's easy to earn 5 to 10% in the stock market on a monthly basis. Let's understand stocks then. What are stocks? A stock or a share denotes ownership of a company. Companies basically sell their stocks to raise money for research, new product lines, or invest in growth. If you've seen financial news, you may have seen lots of letters and numbers flying across. While these visuals may seem quite overwhelming, we don't need to know and follow any of that to make money in the stock market. We will break it down and learn to understand all of this step by step. The numbers on the screen are stock prices. A stock price is a number indicative of the future forecast of how the company is expected to do. For example, if Apple announces a new phone, it's a logical assumption to expect its earnings to increase in the near future, leading to an increase in its stock price. Versus if Apple announces problems with manufacturing due to, say, a shortage of semiconductors, its production will be expected to go down, leading to less stock in the markets and lower sales, seeing the stock prices also go down. Letters on the screen are stock tickers. Stocks are referred to in short by their ticker symbol, usually a string of 2 to 4 letters close to its company name. Some examples are AAPL for Apple, GOOG for Google, NKE for Nike, and so on. Why are we focusing on stocks? There are many investment instruments around us like gold, real estate, crypto, and like I said, it's good to have a balanced portfolio. My preference though is stocks. When companies decide to sell their stocks, it's referred to as them going public. They go through rigorous due diligence with the securities commissions in their respective countries, and then, as it sounds, they are liable to releasing all their financial information publicly. They're bound by many rules that protect us as external investors against massive fluctuations, say on the basis of an influential tweet. Apart from this, the stock market has a bad rep for being risky, but in reality, the stock market has been shown to go up 71% of the time. There's a lesser known fact about stock market too, that you can trade in the market going down to make money. Making money when stock prices go down is called going short, while making money while it goes up is called going long. You might ask, if I make money when the market goes up or down, this sounds like a win-win. Well, it is, but with the right risk management, which we will learn in our following videos. As a side note, you may have heard of mutual funds, index funds, exchange traded funds, or ETFs. These are all combinations and different ways of trading multiple company stocks together. We will stick to focusing on individual stocks for our learning purposes. In the end, what we need to remember is that no endeavor in life is risk-free. There's risk involved in crossing a road, in having a job, in starting a business, and that's the case with stock investments as well. It's a net profit game though, and that's what we learn with risk management. Our gains will be higher than our losses. 80% of your success will be defined by your mindset in trading. While we will be sharing our technical knowledge in the community, your discipline, execution, and patience will be the keys to making this work. At this point, it's good to know your own risk appetite, and we have a free quiz for this on our website. Find the link to the quiz below and set your expectations or adjust your risk appetite for success. Just to recap, in this video, we learned about why we invest, what are stocks, and why we are focusing on stock investments. We also learned about this being a net profit game and having the right mindset for it. In the next video, we will learn about the type of trading most suitable to you and explore charts together.